All right, today we're diving into something pretty interesting, a new model that's looking to shake up how people invest in super high-end real estate. We're going to take a peek inside a platform called Buybricks to see how they're making it possible to own a piece of some of the most luxurious properties in the world. So, how are they pulling this off? Let's get into it.
You know that feeling, right? You see this incredible skyscraper go up in a prime location, and you think, man, I wish I could get a piece of that action. But for most of us, let's be real, the multi-million-dollar price tag means we're stuck on the outside looking in. So, what if you didn't have to buy the whole thing?
Okay, so to really understand how this all works, we've got to go where the action is. And for Buybricks, that playground is Dubai, a city that is just synonymous with jaw-dropping architecture and a real estate market that's about as ambitious as it gets.
So why Dubai? I mean, what's the big deal? Well, it's kind of the perfect storm, isn't it? You've got this booming economic growth, it's politically stable, the tax situation is a huge plus, and it's a massive international hub for business and travel. All that makes for an investor's dream, but also, traditionally, a very exclusive club.
And this is where things get really interesting. See, instead of needing a massive fortune to buy an entire property, platforms like Buybricks are coming in with a totally different game plan.
The big idea here is something called fractional investing. It's pretty straightforward, really. The platform buys a property, and then they slice it up into shares, which they call bricks. So you're not buying the whole villa, you're just buying a few bricks and getting to own a little piece of it.
But wait, how do you digitally slice up a physical building? Well, it all comes down to some fancy financial tech, securitization and tokenization. Just think of it like this. Securitization is the legal magic that turns the building into a financial product, and tokenization creates digital tokens that represent your ownership. It's basically what lets a skyscraper be divided up and traded kind of like a stock.
Okay, so their process is actually pretty clever, and it boils down to 3 key steps. First, and this is crucial, they don't just buy anything. They hunt for bargains, properties they can get for less than market value. Then, they do that digital magic we just talked about, turning the asset into those fractional bricks. And finally, they offer those shares up to investors through their platform.
All right, so buying a brick sounds cool, but let's talk about what really matters. How do you make money from it? Well, the platform has 4 different ways you can go, each with its own level of risk and, you guessed it, potential reward.
Let's kick things off with the big one. How does a 20% annual return sound? Yeah, that's a number that definitely gets your attention. So what in the world are they doing to get that kind of return?
This one's called the New Development Strategy. And with this, investors are basically playing the role of the bank. You're lending money at a high interest rate to select developers who are building brand new projects. It's the riskiest play, for sure, but that's why it has the biggest potential payoff. Okay, next up, 16% per year. Still a fantastic return. How do they do that one?
This is their flipping distressed strategy. What they do here is find properties where a sale has fallen through or is being canceled, allowing them to swoop in, buy it at a big discount, and then flip it on the open market for a profit.
All right, moving down the ladder a little, we've got an 11% per year target. This one is the classic renovation growth play. It's all about finding an older property in a great spot, pouring some money into it for a major modern upgrade, and then selling it for a nice profit. Simple but effective. And last but not least, we have their most conservative option, aiming for about 8%.
This is their cash flow strategy, and it's all about one thing: steady, reliable income. They're not looking to flip it. They buy properties that already have tenants, so you get that rental income flowing into your pocket month after month. So here's a look at all 4 strategies together. It gives you a really clear picture of the whole setup. And you can see a pretty obvious pattern, right? The higher the potential return, like with new development or flipping, the longer your money is tied up, usually about 24 months. It's that classic risk-reward trade-off, laid out right there for you.
Okay, so we've seen the glitzy market, the clever model, and some very attractive numbers, but this all leads to the million-dollar question, or in this case, the 100,000 euro question: who actually gets to play in the sandbox?
I mean, the whole buy a brick thing sounds like it's opening up the world of high-end real estate to everybody, right? But is that really what's happening? Let's take a look at the fine print.
And yeah, here's the catch. This is not for your average investor. The minimum to get in the door is 100,000 euros. On top of that, you have to qualify as a professional client or an institutional or well-informed investor. These are basically legal terms for people or companies with a lot of money and a ton of investing experience.
Oh, and if you're in the US, you're out of luck. So while it's breaking down a building into smaller pieces, the club is still very, very exclusive.
So what's the big takeaway here? Let's zoom out for a second and think about what this all means. This quote from them really gets to the heart of their whole strategy. They say, "We never buy at market prices." That's the key. It isn't just about the fancy tech that lets them slice up a building. It's about being value hunters, finding those bargains to build in a safety net from the very beginning.
And that really leaves us with the big question, doesn't it? Is this the future of investing? A way to make these giant, untouchable assets more accessible? Or is it just a slick, new tool for the rich to get even richer? It's something to think about. Thanks for joining me.